what you're seeing with the price of gold, and you've got to consider the price of platinum and the price of silver at the same time, because you're seeing something unique. This staggering increase in the value of gold. Gold is 110 times higher than it was when I was a kid. Now, I can't think of anything else that is a real commodity that's gone up that much. But gold is certainly signaling financial chaos, and I advocate gold as an insurance policy, and certainly it's been a very handy insurance policy lately, but now you're seeing silver and platinum try to catch up. So certainly the world's financial system is precarious.
Bob Moriarty brings a very different spin to the jubilation you've probably been seeing across the markets as gold and silver tag new highs. Rather than treating these moves as a straightforward celebration of precious metals, he insists we treat them as warning lights, not merely assets appreciating, but signals about the state of the global financial architecture. In his view, the extraordinary advance in gold, now joined by silver and platinum catching up, is less a party than an alarm, a market translation of rising systemic risk, currency stress, and growing pressure on the institutions that have underpinned global finance for generations. He points out an uncomfortable symmetry. Precious metals, which serve both monetary and industrial roles, are moving in ways that suggest a confluence of monetary distress and structural scarcity. That combination matters because it changes the rules. Investors usually rely on volatility increases, correlations can shift, and assets typically treated as diversifiers start to behave like primary risk carriers. For those who prefer evidence to headlines, Moriarty's argument is built on both history and recent market oddities. Long-term price appreciation in gold, the late but rapid catch-up in silver and platinum, and instances where technical and sentiment indicators are diverging in unusual ways. Taken together, he asks us to look beyond the surface-level exuberance and consider what kind of economy produces these price movements. The core arguments of Moriarty's latest analysis focus on three linked themes. First, why rising precious metals can be read as signals of financial chaos rather than merely portfolio rebalancing. Second, why unusual sentiment and technical readings make Moriarty more cautious and more interested in the mining sector than in standard safe haven narratives. And third, how geopolitics and currency dynamics, not only inflation or rate moves, are shaping demand. If you would like the sective look at fission in my 7 dynamics from the contents, specifics that support those conclusions, please stay tuned and watch the video to the end. And if this channel helps your decision making, please like the video and subscribe so we can keep delivering brilliant analysis from leading experts. We appreciate the support and hope you enjoy the video.
You know me well enough. I am a contrarian, and the best contrarian signal that I've ever seen is the daily sentiment indicator, the DSI. And literally 2 days ago, the price of gold went up and the DSI went down. And I have never seen that happen. But the DSI for silver as of yesterday was only 80. And that does not signal a correction. So I think that silver is going to make a leap to 50, at least 50.
How high does silver go by year end in your estimation?
Strange enough, and that's a good question, but you've got it inverted. Anytime you're talking about the price of gold or the price of silver, you're talking about 2 commodities. You're talking about silver or gold, and you're talking about the currency in which you're quoting it. The price of gold and the price of silver today is predicting financial chaos and perhaps war.
$61. Shouldn't we also anticipate oil getting a bid as well if war was on the horizon?
We should, and that is interesting to me because if it's accurate, there will be no war, but we don't know that's true. The United States has sent a number of refueling aircraft and a number of fighter aircraft, presumably the F-22 and the F-35, to Qatar. And there are actually 6 nuclear sniffer aircraft orbiting over the United States. So Donald Trump appears to have gotten his marching orders, and the president of peace is about to start another war, but oil doesn't see it. So it's an interesting dichotomy. Either oil is accurate or gold is accurate, but they cannot both be accurate. What you're seeing with the price of gold, and you've got to consider the price of platinum and the price of silver at the same time, because you're seeing something unique, this staggering increase in the value of gold. Gold is 110 times higher than it was when I was a kid. Now, I can't think of anything else that is a real commodity that's gone up that much. But gold is certainly signaling financial chaos, and I advocate gold as an insurance policy, and certainly it's been a very handy insurance policy lately. But now you're seeing silver and platinum try to catch up. So certainly the world's financial system is precarious. The UK is bankrupt. France is bankrupt. Germany is bankrupt. There are riots against corruption in Nepal. There are riots against corruption in Indonesia. There are riots against corruption in Madagascar. And frankly, I think we're going to see it in the United States very soon. The one takeaway that I got from Donald Trump when he had that meeting on Tuesday with the generals was that we were going to go to war against American cities. And that scares me, frankly, because we got 350 million Americans, we got 400 million guns, and sooner or later people are going to start thinking, well, those guys make really handy targets. I am not against his theory, okay? We need to reduce crime in the democratically run cities. But he walks into a china shop with a baseball bat, and that's always dangerous. He needs to think about coup d'etat. I'm not sure if I was the president of the United States, I would go in and insult 1,000 generals and admirals. They're the guys who actually control the military. I would be very interested in seeing, in hindsight, how many of those guys retire in the next week or two. Because frankly, okay, for most of them, and that would be 80 or 90% of them, they're at their peak in their careers. So it doesn't cost them anything to retire. They've all served over 30 years, so they're going to max out at 75% of their wages. I don't know what the fallout from that meeting is going to be, but if I was a general, the Secretary of Defense and the President just insulted me, and I'm not sure if that's a good idea.
Yeah. Well, what do you think he alluded to when he said about the enemy within?
Well, the Democrats, okay. I think the guy doesn't realize it, but he's trying to start a civil war. I think we're a lot closer to a civil war. If you've been paying any attention, the number of mass murders has just shot up since Charlie Kirk was assassinated. And you've got a lot of Americans who think, I'm going to go to the closet, get a gun, and go shoot people. And I happen to be against that. There is a crime problem because of the corruption in the Democrats, which is absolutely total. But Donald Trump's reaction to it is he's going to try to out-corrupt them. He has tripled his wealth since he entered the White House. The family in general has made something like $7.5 billion as a result. He's selling cell phones at $499. He's selling perfume at $249. He's got a meme coin that 86% of people who invested in lost money. He's got a meme coin for his wife. And I'm thinking, wait a minute, this guy wants to rename the Gulf of Mexico. He wants to rename the Defense Department. He wants to challenge the legal system in Israel. He wants to challenge the legal system in Brazil. He wants to change the name of football teams. Who exactly does he think he is? What was he elected for?
In the broader context of Moriarty's argument, what we're witnessing is a systemic unraveling that extends far beyond metals. The accelerating divergence between gold and oil prices isn't just a technical anomaly. It's a reflection of collapsing confidence in global leadership and monetary order. When gold rallies while oil remains subdued, it suggests that investors are not betting on geopolitical conflict as much as they are on monetary dysfunction. Moriarty's warning is therefore twofold. The world is entering an era where traditional safe havens like treasuries or fiat reserves no longer offer safety, and where gold, silver, and platinum are reasserting themselves as the ultimate barometers of instability. This dynamic has already begun to erode public trust in Western financial governance, with widespread social unrest emerging as a visible symptom of deeper fiscal decay. In Moriarty's view, this is not the onset of a speculative mania, but a reversion to economic reality, where value flows back to the foundational assets that underpin all real wealth. It's within this context that his next comments on resource stocks and the coming shift to a resource-based global system find their full meaning. The market is not just rediscovering gold. It's rediscovering the very basis of money itself.
Have these mining stocks run up too far too fast, or are we just simply reverting back to mean here? Is this not so much a bull market, but a reversion back to normalcy?
I'm not even sure it will be a revision back to the mean. You always deviate from the mean, and then you revise to the mean. But let me give you an idea of what you're going to see. There's a company called Prospector that came out with extraordinary results, 42 meters of multi-ounce gold yesterday. And the stock was 30 cents at the open yesterday, and it was $1.60 today. The gold stocks in general, gold and all resource stocks in general, are so cheap now. You're going to see a lot of stocks up 1,000, 2,000, 5,000%. As a percentage of the economy, in 1929, mining was 29% of the economy, and now it's under 3%. A hedge fund manager or one of the major firms said you need to change your allocation. In the past, the best allocation was 60% stocks and 40% bonds for protection. And you need to change that to 40% stocks, 40% bonds, and 20% gold. You get into stupid numbers when you talk about 1, 2, 3, 5. When you talk about 20%, you're literally talking about multiple thousands of percent increase in gold. And I'm already shocked. I was buying gold at $35 an ounce 60 years ago.
Do you still have the gold that you bought back then today? You bought that in 65?
I'm not sure I bought this one, but I did buy gold in 1967 that I still have. And I look at the purchases I've made over the last 30 years. There were English sovereigns. My wife was really funny. I talked to her a little bit to you about it. She was goofy. Okay, she married me, so she was goofy. And she bought some English sovereigns. Okay, and I'll show you what an English sovereign looks like. It's about the size of a US $5 gold piece. and they were $65 a piece. And she put it in a little envelope and marked the price down. I thought, that's goofy. But, and I've still got that somewhere. And I went out to see what they are cost now, and they're $900. So there are going to be some gigantic fortunes made in resource stocks because we're going to go from a debt-based system to a resource-based system, and BRICS has already started the way. The debt-based system of the West is clearly collapsing. When the French seized that Russian tanker a few days ago, that was piracy. When the EU stole $300 billion from Russia, I'm not talking about whether the war is a good thing or a bad thing. The EU stole $300 billion. The United States and the EU and NATO and Canada and Australia have given everyone else in the world a really great reason not to hold US dollars. And we're going to pay a price for it. Americans are going to see inflation and or hyperinflation very soon as a result of deliberate actions on the part of the government. Well, not only tailwinds, one of the things we haven't talked about, but we should talk about is who or what drives the price of gold. And it literally is a rush out of the dollar, out of T-bonds, out of T-bills. You got this bizarre situation where in the UK, they can't balance the budget. They're about to increase taxes dramatically. There have been riots in France, and I love the French. They're not rioting for the government to balance the budget. They're rioting because they don't want to lose their benefits. And of course, in any country, when the voters learn they can vote themselves benefits, that's the end of that country. And that's where we are. We're seeing the greatest shift financially since 1492. We never talked about the United States being a democracy until Franklin Roosevelt. Okay. The United States is not a democracy. The United States is a republic. The best definition that I've ever heard of democracy is two wolves and a sheep arguing over what to have for lunch. And I did find it just wonderful that the French are literally marching in the streets saying, don't reduce our benefits. And of course, their solution is to increase taxes. And they've already got the highest taxes in the world. So we are at peak insanity, and we're going to pay a price for that very shortly. I just hope we survive the insanity. If you want to see what's going on, you need to go back and reread Decline and Fall of the Roman Empire, because everything that happened in 200 or 300 or 400 AD is happening today. You've got emperors. You had 3 emperors in 1 year because they weren't paying the Praetorian Guard enough money, so the Praetorian Guard killed them. You got the Charlie Kirk assassination. That's certainly goofy. We know that's goofy. You got corruption on such a massive scale, and the fact that there are riots going on all over the world is a answer against the corruption. It was all forecast in the fourth turning. And you've got 2 directions that you can go. You can go to totalitarian government, or you can go to peace. So you got to do one or the other. And I think there's a lot of people rebelling against the status quo, and we are going to see big changes. And it's a good time to protect yourself and protect your family. It's an extremely precarious time financially.
When Bob Moriarty draws parallels between the present moment and the collapse of the Roman Empire, he's not reaching for drama, he's identifying recurring historical patterns. In the late stages of Rome, currency debasement had become the state's default survival mechanism. The silver content of the denarius once nearly pure, was repeatedly diluted until it became little more than a copper token coated with illusion. Inflation soared, trade broke down, and public trust in both money and government eroded to nothing. The empire's expansion had long ceased to be productive. Its bureaucracy grew parasitic, its wars endless, and its leadership detached from reality. The result was social fragmentation, economic stagnation, and eventually, collapse. Today, the parallels are undeniable. Modern economies, led by the United States, are mired in the same excesses: staggering debt levels, political polarization, moral exhaustion, and a financial system addicted to artificial liquidity. The Federal Reserve's balance sheet has become the modern equivalent of Rome's melting cauldrons, constantly creating new currency to sustain an illusion of prosperity that no longer exists. Just as the Roman populace turned to bread and circuses to escape the decay, today's societies drown in distraction, consumer credit, and short-term gratification, blind to the structural rot beneath the surface. The warning signs Moriarty highlights are not theoretical, they are here, and accelerating. For the United States, this turning point is particularly severe. The dollar's global dominance, long maintained by confidence rather than backing, is faltering. De-dollarization is accelerating. Foreign central banks are quietly offloading U.S. debt, and gold is being reintroduced into trade settlements across Eurasia and the global south. The empire of debt is unraveling in real time. Just as Rome's decline ended centuries of centralized power, America's overextension, militarily, financially, and morally, may usher in a multipolar world where control over real resources, not paper promises, determines influence and survival. And in that world, gold and silver are not speculative assets, they are lifeboats. That is why Moriarty's message carries such weight. Gold and silver are not investments in the conventional sense. They are instruments of defense against systemic failure. The decisions made now to hold real assets, to reduce exposure to financial intermediaries, and to preserve purchasing power outside of collapsing institutions will define who emerges intact when the next phase of the fourth turning takes hold. This isn't about chasing price targets, it's about ensuring continuity. History is clear. When empires fall, those who hold tangible wealth endure, while those who trust paper and politics lose everything. In times like these, awareness is not enough, action is essential. If you found this analysis valuable, make sure to like this video, subscribe, and share it with others who need to understand what's unfolding. The window to prepare is narrowing, but knowledge and decisive action remain the best defense. Stay informed, stay grounded, and above all, stay protected. Thanks for watching.